Now let's turn to the Reserve Bank's interest rate decision tomorrow. Financial markets this afternoon put a 77% chance of a rate rise tomorrow. Ironically, with the Reserve Bank meeting, which has already started, it's a two-day affair, of course, but that rates decision will drop at 2:30 Eastern Summer Time tomorrow. The Reserve Bank's hand appears to be forced because of its own rhetoric about wanting to stay ahead of the economy. This was true when the Reserve Bank cut interest rates in February last year, even before inflation had settled into its preferred 2 to 3% band. At the time, trim mean inflation for the December quarter of 2024 was 3.2%. The headline rate was 2.4%, but that was artificially affected by government energy subsidies. Today, trim mean inflation is 3.3%. Headline inflation is 3.8%. So in February last year, the RBA said inflationary pressures are easing a little more quickly than expected. But it did warn that if monetary policy was eased too much too soon, that inflation could settle above the midpoint of its target range. And that is exactly what's happened. So if the RBA was prepared to cut in February last year based on the trajectory of inflation, then consistency of messaging would suggest it needs to raise rates now. Let's find out with Diana Mousina, who is the Deputy Chief Economist with the AMP. Diana, always good to chat to you. Do you feel that maybe the messaging of the Reserve Bank has to be consistent and that would lead us to an interest rate rise tomorrow?
Afternoon, Ross. Always great to chat to you too. Well, our view is actually that the Reserve Bank is going to hold rates tomorrow. I mean, we are some of the lonely few of economists that are holding that view. And fundamentally, it's based on the expectation that the Reserve Bank's forecast, which it releases tomorrow on inflation, is still going to show a projection that they're going to get inflation within the 2 to 3% target band, probably by the end of this year, which is where the forecasts were last time around. But, as you pointed out, with all those inflation figures at the beginning, clearly the pace of inflation is running above 3% at the moment. It could make the Reserve Bank feel uncomfortable. So I'm not particularly convicted that they're going to hold rates tomorrow. It's just our forecast. It's obviously going to be a really close call. I think the board's going to be divided about what to do, or at least I hope that the board is divided, because that would show a lot of independence between the Reserve Bank and the independent board members. But it is going to be a really close call, and I think one that's a bit closer than markets are pricing in at the moment. Earlier this afternoon, I saw that markets are pricing in about a 70% chance of a hike tomorrow.
So Deanna, that's an interesting thing about the independence of the board, because under the new arrangements with the Reserve Bank, of course, they have to now show the way in which the members have voted. It's not just that, it's also then the press conference tomorrow afternoon with Michelle Bullock is going to be so interesting to see what the rhetoric, what the reasoning is, and therefore the messaging is really going to be the key thing here, isn't it?
Yeah, I mean, I have found the messaging, to be honest, a little bit confusing from the RBA within the last 12 months. I'm not sure that the review into the RBA actually accomplished what it set out to do, which was to improve the communication of the board. Because now we're sort of getting comments all that Michelle Bullock can't speak on behalf of the board, whereas before Philip Lowe would come out and say he would speak on behalf of the board, whereas she's saying that she can't do that because the board members all vote independently. But the review told us that basically the RBA board has never gone against the recommendation given by the RBA staff. So, and we won't know what the RBA staff recommendation is, but we will know if there's not a unanimous vote within the board. So I'm not sure how much detail we're actually going to get from Bullock around that. They're normally a little bit cagey about what they talk about, behind closed doors at the board meeting. But we will see how many votes there were towards potential hike or hold as well. And I don't think that the decision will be unanimous. We have had one decision within the last 12 months where a few board members, I think, voted to cut interest rates, but the decision was to hold them that month.
OK, so one other thing about this that's really important, because the AMP has been involved in this in the past week or so, and that is the level to which government spending has affected inflation. to the high side. Now, you'd have to say, taking off energy subsidies, the headline rate has been affected by that. You can't even question it. But it's not necessarily government spending per se, but it's government-related spending, government policies that have affected prices in other areas and also demand in other areas.
Yeah, the way that we would think about it is to look at administered and index prices. So, administered prices or index ones are mostly related to government areas. For example, education, medical and hospital services, childcare, parts of utilities, like you just mentioned, around electricity and gas, property rates and charges, dental costs. I mean, I guess you could argue that they're not necessarily administered, but they do have a lot of relation to how much the government is spending across the health field. I mean, a lot of that is related to wage increases, and we know that both the federal and the state and local governments have seen quite significant wage increases in the past few years. And that's obviously added to some of these pressures around high government spending. But I think more broadly, it's just that when you have an economy that's only able to grow probably at 2 or 2.2%, like our economy can at the moment, if you have the government sort of taking up a larger share of that, it leaves less room for the private sector to grow. So if the private sector is trying to get resources, it pushes up prices.
I'll tell you what, always good to have you in the program. Mousina is the Deputy Chief Economist at the AMP. We'll have all of that information tomorrow here live on Sky. Deanna, thanks for your time.